Hello there traders. Today I have another Heiken Ashi trading strategy. In this video we will use Heiken Ashi plus trendlines to make this trading strategy more effective. So in this video I will also show you the patterns that we are going to use to make this trading strategy more powerful. You might be wondering on what is Heiken Ashi. Heiken Ashi in simplest form is a candlestick like that reduces noise from the market, unlike Japanese candlesticks. In this video I will also teach you the basics of trading patterns. Let's begin by teaching you the patterns. There will also be a dedicated video about pattern and how to draw trend lines. So make sure that you are subscribed to the channel so that you won't miss it in the future. From this pattern we can see that this is mostly happen when the trend is about to end. Another pattern is this one in a bullish or bearish market. Mostly you will see a flag or a correction for continuation to the direction of the trend. I will also demonstrate this pattern on a chart. Some corrections can look something like this. As you all know, in this channel we don't trade when the market breaks out of that trend line, because that will be late. So in this video I will teach you how to enter before the breakout. If you already know these patterns, then you can skip to where we start making those trading setups. This is flag patterns or corrections. Remember that as we move on throughout the video. Let's look at this closely. If you're new to the channel, I advise you to check the video on how the market changes direction. I will also leave the video in the description below. This will teach you how to be on the right side of the market as always. So from this pattern over here, we can see that we have an impulse to the downside. That we have a bullish trend in a corrective form. Then from that high we can also see that the market broke the previous higher low. Then followed by a correction to confirm that we are going bearish. If you stay tuned throughout the video, I will also show you how to find those reversal area to be accurate as always. Did you know you can predict a reversal using Fibonacci extension? In this part of the video I will teach you that. Focus and take notes. From here we can see that price is trying to move higher. So what we're going to do is predict the next reversal to the downside. We will plot the Fibonacci extension from the low to the high and then to the low that is trying to push the market higher. This works like a charm and you will be addicted from using it. From here, as you can see how I plotted the Fibonacci extension. Then the reversal will be at 1.27 and 100% of the extension. You will see on the next example how effective it can be to use it. From this example you can see that we will expect a reversal to happen in that yellow area. The market mostly will do something like this. And in most cases, if you have studied the Elliott wave theory, you should know that this is an ABC correction. So what we are doing, we are just trying to find the last C leg of the correction. So now let's do it in a real market chart so that we can all be able to see and use it. From this strategy we will be using even trend lines to draw those corrections. From this chart over here we can see that if we plot the Fibonacci extension, you will realize that the market reversed at the 1% and the 1.27 of the Fibonacci extension. Then what we are going to do is to sell using the Heiken Ashi at that expected reversal area. From that expected reversal area we are going to trade to the bearish when the Heiken Ashi changes from being bullish to bearish. Then the stop loss will be above the high of the previous Heiken Ashi candle. Then for take profit we will use the same Fibonacci extension to find the take profit levels. The level will be the same as the ones we used to find the reversal area. What I am teaching you here, you have to go and back test it yourself. And this can also be used with Japanese candlesticks. In Lotus Trade we share everything that can be used to improve your trading game. My full trading strategy will be released in the future. So stay tuned for that. You can also follow me in Telegram for weekly free trading signals. The link to Telegram will be in the description below. Now moving on to more example of this video. From this one here I want to teach you how to enter the market before the breakout and how to make take profit. From here we can see that the market is trending to the downside over here. But the market is trending to the downside correctively because we know that after every correction in the market there will always be an impulse in the direction of the trend. So from here what we can do is to draw a trend line to reveal our structure. From this structure we can see that this is a reversal pattern. So now we will enter as low as possible. And remember this, as a trader you should let the market come to your area without chasing it. Because you can enter early and then the market can still come where you expected to enter. From the low of the trend we can expect to buy on the third touch, and being that price is as low as possible in conjunction with the previous swing low. So we will enter the market at the price action when it changes from being bearish to bullish. Then stop loss being below the previous low. Then take profit being at the 1% or the 1.27% of the Fibonacci extension.
In our backtesting, we use Trader Edge, a dynamic backtesting software that revolutionizes strategy management. This platform excels in consolidating all your strategies in one place, saving you both time and money, while providing clarity on which strategy suits the current market conditions. With features like date tracking, it keeps you motivated and organized, allowing you to monitor your backtesting progress effectively. Trader Edge also offers forward testing capabilities for real-time scenario analysis. To enhance your trading efficiency, find the link in the description below.
Mostly using this trading strategy with pattern works well because you will identify those trading pattern very easily. So from this chart over here that happened during the week in the 1 hour time frame, it was pretty easy. So now what you can do is to draw that reversal pattern. Then on the third touch of the trend line on this reversal pattern is where you will expect to sell. Now that we have drawn our trend line, we can all see that the structure is very clear now. If you are subscribed to the channel, you will never miss a series whereby I will be going to every structure in details and on how to make those take profit from this kind of pattern. This is part 1 of this series where I use Heiken Ashi with trend lines. All that I am trying to show you guys is the pattern that can be used with Heiken Ashi so that you can get started and start making money. Now on the third touch of the reversal pattern, what we can do is to wait for price to change from being bullish to bearish and then enter the market without fear. Now from here we can see that the market is trending to the bullish side. This one of here you will find it in a trending market. Mostly through the midday of the trading day. So now what we have to do is to draw the trend line to make our pattern to be clear. Now that we have drawn our trend line, the structure now is very clear to our eyes. And then to buy from this kind of trading setups is very easy. Because what we are using is wait for the Heiken Ashi to change from being bearish to bullish. Like on this one over here. If you liked this video so far, please consider liking the video so that it helped this video to reach more people who are still learning. Or to reach those who want to improve their trading skills. So moving on to more examples of the video. Now that we have this messy chart over here, you will see how simple it is to identify the reversal structure in this kind of scenarios. And remember, patterns can also be used with support and resistance, like from this example you will, how clear it is after we have plotted our areas. Now after plotting this areas we can see that our resistance level is holding price at the point of reversal inside the reversal structure, and we can also see that we have an impulse and correction. So to sell from this structure we just when price changes from being bullish to bearish at the reversal area. If you don't understand this now, just comment below. I will definitely make another video explaining even more on this strategy. Our last example on this video is the pattern that I showed you in the beginning of the video on how to sell when the structure breaks the previous low. And this can also work when buying, but the structure will be vice versa. Firstly, let's start by plotting our trend lines so that we can see the structure clearly. After doing so, we can see that price dropped lower with an impulse, then it made a correction. After that correction on the retracement is when we can sell. Target the major previous low. I hope you guys have enjoyed the video. What I can tell you now is go and back test it yourself, then come back and comment on what you have discovered when you were back testing. Now I will put the last example while the video is ending. Enjoy the rest of your trading day.